Good afternoon, everyone. This is Marvin with StockMarketPlan.com. Today is April 12th. I figured I'd do a gold report today. It's been a while. It's last one I did was March 2nd. There's reasons for that. Basically, March 2nd, we were looking right in here, and on that day, gold was trying to break out, and it actually became a failed breakout. Now, what we have here is, again, paying attention to the long-term bull trend line here, bullish trend line, plus the averages. So gold is still in a very much in a long-term bull market with some dips. And what I've experienced with gold is people try to make this correlation between the markets, equity markets going down and gold going up, and vice versa. And really, in the past 2 or 3 weeks, gold is really established itself as a asset that really moves to its own beat. I mean, just take today for example. The market today is down well over 1%, and so is gold. So really, gold is going to move in its own beat. It's going to do its own thing, and that correlation between markets and gold, it's still there, but it's not as strong. I think gold is looking to other things like inflation and price of goods and devaluation of the dollar and things of that nature. I mean, and sometimes they correlate with the markets. When markets go down, gold goes up. But again, it's for the last 2 to 3 weeks, it's amazing. It's really moved to its own beat. So I'm going to go ahead right now and share with you some new technical levels that I'm looking at. The levels that are of significance to me right now are, again, your averages. The last time I did the report was on March 2nd, and here's that day right here where it actually broke all-time highs right here from the previous session. I talked about that right now gold had at that time that had no significance resistance level, or roof, one might say. So sure enough, it came down. And I also mentioned the 20-day moving average, this green line, and then this red line is the 50-day, and then the trend line, and then the 200-day. These are all levels. As the market crosses these lines of resistance, now they become support. And sure enough, we came down and we hit right there and bounced right off, closed a little bit below, above it, closed a little bit above it on that day, on March 10th, and then on March 11th again hit it again and closed up, and then the next day we pierced it. Okay, and then we got caught by the second, I think I referred to them as breaks, the second amount of emergency break right here, the 50-day moving average. So this is what happens when an asset gets to technically have the privilege of being supported by averages and trend lines, because now you've got people over here that are going to support this gold. And as we move down to these lower levels to retest areas that we just went through right here, we're going to retest, we're going to test, we're going to test, and off we go again. So this is important to know, because if you can afford a move to here, let's say you bought right here, where I said the gold had no resistance, which was the case on that day, on March 2nd, right here actually. Okay, let's just say you could give it to here, or even here. Okay, then you give it a chance to trade that way. That's what I would do. So that's the way I play this, the technicals. Okay, if I can come down to here, okay, and give up that percentage point to possibly see higher prices, I'll do that. Maybe it's over here. Maybe I can do half of it to here, and if it slashed through here, I would cut half of my position, and then so on, and you keep using these levels. Well, if that was the case, we bounce right off the 50 and off we go to new highs again. So whatever your risk tolerance is, if not, I mean, if you didn't have these averages and you weren't looking at this data, what would you go by? Just pure instinct, pure noise, pure what people are saying on CNBC or other financial networks? It's just not good enough. I mean, people are out there saying buy gold, people are out there saying sell gold. One has to ask the question, why? What do you see besides geopolitical noise and all this nonsense? I mean, very few of us have the type of pockets to tuck away a ton of money in gold. We know it's in a bull market, and watch it run to here or past this and then back up. Okay, a lot of us are managing our wealth, and this is one way of doing it, looking at technicals. Anyways, I'm going to get off the soapbox there, and I just wanted to show you how these technical levels are important, because here we go, test, and off we go to the races again, on to new gains. You know, I come down here. What percentage loss is that right there? I mean, we're talking what, 2.5%, 3%. So I can give myself that and say, you know what, I'm still in good shape here. It's trading above these critical technical levels here. Okay, maybe your pain threshold is all the way down to here. You know, what all this does is take care of the panic. You know, as gold comes down, let's just say something happens in the marketplace, I don't know, that makes gold go down. Well, you know, we come down here, well, I'm fine. You know, perhaps below here, that I'll probably be thrown in the towel after that. But I mean, gold is still very much intact. The gold price is still very much in a bull market. Just wanted to get on here and share with you what I'm seeing. Okay, again, this is Marvin from stockmarketplan.com with your gold report for April 12th, 2011.